It's just after 8:30, so good time to get that promised fundamental conversation going on the stocks that you need to keep an eye out on. We have Deven Choksey with us for exactly that. Deven, good morning. Good to have you with us. We want to start off with, some of the names that have been in the limelight recently because of slightly unfavorable news flow. Now, I just want to throw this one at you in case you've had a look at Polycab, dream run on the stock. I mean, no one's denying the fundamental opportunity but it's just this development around some, IT issues that has led to correction. How would you look at Polycab and that related space? Because it does have, a fair amount of competition as well right now.
Yeah, Survey, good morning. Well, I think two things will have to be looked at. No denial of the fact that the fundamentals of the business and the company remains extremely strong and convincing. Be it Polycab or be it, I think, other peers in the segment, they all are having maximum time as I would call them as because of the larger amount of participation happening from the building material segment businesses, where I think due to the large amount of constructions happening around, I think these companies are having favorable times for the products that they are having, including the electrical cables and among others. So there is no denial of that particular fact either. However, I think our markets have priced in everything today. I think whatever the good possibilities that you are having right now, be it for current year, be it for next year, or be it for year thereafter, I think most of the stocks are completely pricing in this kind of opportunities. Any negative news or any reason or any kind of a news which is not negative, but at the same time, I think it's only, I think, a rumor. In such situation too, I think the market has no ground to basically hold this kind of valuations. And that's where you are going to see the challenge. This is not only for one company alone, but I guess I think most of the companies in the marketplace where there is no chance for anybody to, I think, make a mistake or for that matter, see any kind of negatives. I think this is where probably one will have to remain more concerned about. Maybe the investigation on this allegation part, I think on the Polycab, will get answered at some point of time. And that is where probably I think one will look into it with a favorable answer coming from the management of the company. But the fact remains that I think at this point of time, the stock would probably halt the rally because of the negative news flows which are happening in the marketplace.
Okay, just want to point out, by the way, we just had that news flash from Paytm. They are looking to invest 100 crores in Gift City in Gujarat and looking to start some sort of cross-border payments based out of Gujarat. We've had a slew of announcements on and around Gift City. Lots of companies setting up. Remember, there's PFC that sort of gave a release to the exchanges on this yesterday. ONGC, lots of PSUs, even non-PSUs. Big beeline for Gift City in the works. So I guess the International Finance Center over there is really kicking off, and it's kind of tying in all these announcements with the vibrant Gujarat summit. So it's all eyes on Gujarat.
Indeed. Let's see how that works out then. But Deven, let's discuss a few more stocks then. Let's talk about Vidanta. You have the parent that's again got another downgrade, Vidanta Resources, coming in from Moody's. They believe that the risks are still high in terms of default. At 260 rupees, what's your view? I recall when the first time around we were talking about these defaults was around 3.5 months ago. The stock had gone down to 210. But from there, it's up close to 20%. So the street is still hoping something will come about. Your view?
So Nigel, good morning. Underlying business condition remains, I think, pretty strong for the company. There is no second thought on this particular subject. Be it, I think, ferrous metal, be it non-ferrous metal, I guess I think the business condition remains absolutely strong and convincing. At the same time, the input cost, energy cost prices are down, and as a result of which, I think it promises to give you the margin, which otherwise I think would always be a challenge for most of the commodity companies in a rising crude oil scenario. Here it is, the situation is favorable on demand front. The situation is favorable on the margin front. As far as the group and the outlook is concerned, I believe, I think their restructuring process is going to take away a good amount of time for them. Next 1.5 to 2 years probably I think would be spent mostly in completing the restructuring process of the group which they have announced. Once that particular process is through, then possibly one can look at afresh as far as I think the group and the business is concerned. At this point of time, I think though valuation-wise the companies are remaining attractive, one will have to look at very clearly how exactly the restructuring is shaping up, how exactly demerger is taking up, how exactly the companies which have basically lined up those business activities would eventually get into them. So to that extent, I think we will have to wait and see for some time.
Okay, that's Vedanta in the spotlight today. Deven, hold on. We want to discuss two-wheelers with you, specifically Bajaj Auto. That stock's been on a tear. There's so much of positive news surrounding it. It again crossed that 7,100 mark, at least intraday yesterday. The board has approved a 4,000 crore rupee buyback. The price of that buyback is 10,000 rupees per share, substantially higher than the current market price. We caught up with Dinesh Thapar, the company's CFO, to talk about the rationale, the pricing, and really the road ahead for the company. He sounded extremely optimistic. Take a look.
Essentially about 4 million shares that we are looking to mop up as part of this buyback. It's about 16% of our paid up share capital and free reserves. And therefore, this is subject to shareholder approval. And we'll run through that process between now and the middle of February. We reflected on this and had an extensive discussion at the board, was to really use this as an opportunity to reflect on our performance over this last little while, which has really been quite compelling and really outperforming in terms of the broader industry. Will not end up diluting because we think, with the current pricing that we've put out, it presents a very compelling proposition for investors and shareholders to really make their full entitlement. And therefore, if that was to be the case, the promoters will tender in line with their entitlement. To that extent, I expect post buyback shareholding for them not to be diluted. In fact, it might creep up slightly because we've also got a 15% reservation for small shareholders over here. So when you do the maths on a post-buyback percentage, the promoter holding, assuming everyone tenders in line with their entitlement, should be at about the same levels or a tad higher.
That is Bajaj Auto, and what a move the stock has seen. Now, Deven, I mean, if you're a shareholder, you're just, you're at the top of the world, literally, right? The stock is a doubler in the last 1 year, and then comes a buyback at 10,000 rupees a share. What would you advise? I mean, would you at all advise tendering in? Would you remain invested? And since there is still a big differential between CMP and buyback price, I mean, is there an arbitrage opportunity at all?
So, Surbhi, I guess I think two things. One, this company is doing a buyback at about 2% yield to the market capitalization. 4,000 crore and 2 lakh crore worth of market cap. And similarly, I think they've been distributing dividend also of the same amount. So I think the company is extremely high as far as I think their distribution to the investors are concerned, shareholders is concerned. So from that perspective, I think the shareholders will not have any kind of a regret, even if they hold on to this particular stock in the portfolio. Second point, I think, which we are talking about is investors giving away and do the arbitrage. Yes, I think there will be some possibility of investors partly giving away because as such, as I said, the number of shares which are likely to get tendered, I think is somewhere around 15-16% of the total equity. So to a greater extent, I think if these particular shares have to be bought from the market, then in such case, I think you are not parting the full portfolio, you are parting hardly 10-15% of your portfolio. I guess I think some investors would try and make an attempt to get this particular situation to their advantage. So that is distinctly possible. But leave aside this particular transaction for a while and look at the fundamental prospects of this company. I guess I think they have been transitioning superbly from where they were to what they are right now, and what they are likely to do in coming years, in form of I think having the sports motorcycles. I think with the Husqvarna at the top end, then comes the Triumph, then comes the KTM, and then comes I think your Pulsar and other range of vehicles, I think, which are between 50 to 125 cc's. So a power range of motorcycles along with the electric vehicles entry, which is a transition that they are making. I guess I think this company will remain in exciting times for next 10 years. So one would probably stay invested from the long-term investment perspective. Short-term trading ideas, I think, which the arbitrage which we are talking about would be limited to 10-15% of the holding in the portfolio.
Now, another sort of, I don't know if it's imponderable at this point, is Z. Deven, morning. It was sharply down. There was a sharp recovery, which all of it pretty much got sold into and ended about 8-9% lower. What to do with this one? I mean, if you're holding on, hoping that this merger goes through, and then you hit with all this noise over the last 24 hours or so, hold on or, exit? What's the advice?
Good morning, Prashant. Well, I guess I think two scenarios which we look at. One scenario is the merger goes through, which is a positive scenario. However, even if it goes through, I guess I think the challenge would be for the company, the merged company, to bring in the company to the profitable and higher profitable level would be significant. If you look at in last 2 years, I think the business of the company has actually got affected. The financials of the company has actually got affected. And in order to bring back the company to the higher level of financials which they enjoyed in the past, I guess I think they will have a challenge to go for. And that's where probably I think if the merger, even if it is taking place and even if we consider favorable, it's a long drawn process of next around 10, 2 years or more. I don't know about that. I think that may probably transit even further. The way the Japanese work, I believe, I think the process, I think normally takes longer time. So 2 years will be, I think, a safe zone, if at all I have to put it across, I think, for the company to transit if the merger goes through. Mind well, I think in last 2, 3 years, I think because of this situation with the group, I think the Z has not made any money for investors. So in probably, I think in next 2 years, so in total figure of 5 years, I think is going to be, I think, a period which is a long wait for investors. Look at the second scenario. The second scenario, the merger gets called off. I think that is once again, I think, another set of challenge. How exactly you position this company, what kind of resources it would require, how do you maintain your positions in the market? These are all some of the bigger challenges, which probably may be speculation at this point of time to talk about. But I feel that it is safer to think, keep yourself away, and probably I think you use the opportunity elsewhere for investment.
Okay, all right. Deven, I'm tracking the metal space for two reasons. One is on the ferrous side, because ArcelorMittal has gone ahead and increased prices by 50 pounds on a per ton basis. The reason is input costs have gone up. There's unlocking trade or the reopening that's taken place. And also import, opportunities have reduced. So that's why the European market could get a bit of a leg up. The direct beneficiary will be Tata Steel because, if a competitor is going ahead and increase prices, obviously they get a bit of a leg up. And indirect beneficiary will be JSW Steel because they're exporting some steel to various parts of the world, so that gets a leg up. The other one I'm looking at is Alcoa. They have gone ahead and they shut down one of their alumina refineries in Australia. That has a capacity of around 2 million tons. It contributes close to 100% to the global alumina supply. So that'll be good news for Nalco because they sell alumina, and good news for aluminium prices. If alumina goes up, that's an input for aluminium. So, I'm watching out for a couple of these stocks. How would you approach this space, Deven? On steel, for Tata Steel, what's your view? Because these price increases. And on the non-ferrous side, Nalco, some would believe maybe the stock has run ahead of itself. But if alumina can move up, that could give it a bit of a booster shot.
Yes, Nigel. I guess I think the demand scenario, as I started saying up in the first part of my interview today, I feel that I think the demand scenario remains extremely strong for the metal as a commodity. And if my reading is right, I think we have entered into probably one of the strongest bull cycles for the metal in coming years. Whatever the adverse situations or the headwinds at one point of time was about the crude oil and the pricing pertaining to that, I think that seems to be remaining under control, despite of I think global turbulence in the eastern regions. I think where the wars and etc. is happening. Still, I think the crude oil prices are remaining under control, so which is a good sign, and it is likely to revive the demand for the ferrous, non-ferrous metal both. Also, given the fact that we are transitioning from the fossil fuel economy to the renewable economy, the definite requirement would be the metals. And this particular situation is giving a good amount of clarity for all of us. On one side, the cost is coming under control because of the crude oil prices. On the other side, demand scenario remaining strong, which is allowing them to increase the prices. I think it's a good combination for metal commodities to see higher amount of performance, and particularly, I think, the stock prices. So one would remain confident about the prospects of companies like Tata Steel, JSW, including I think Hinalco, Nalco in the portfolios.